All right, let's get into it. So today we are going to start with dollar. So dollar seasonal tendency over the past 50 years is bearish to open the month of October. And by second or third week of October, we expect to hit our low until the middle to end of November. The dollar should be bullish just based on seasonal tendency. So we're going to program that in to our bias. All right, let's get into it. So quarterly chart. Here we go. Monthly fair value gap. This is also your monthly close. Really clean rejection from this monthly gap. So quarterly and annual targets, I'll be looking to buy side liquidity. As we see, we're making a buy model. And for us to have another instance where we make this accumulation, as we see here, we need to reach an objective. Can it be this fair value gap? Yes, but considering seasonal tendency, I'm looking for this liquidity to be reached prior to another accumulation like this. Zoom in. As far as the weekly goes, I will be looking for price to come into this fair value gap and reaccumulate. I don't see price particularly moving and closing below this. This is our current dealing range right here. This low to this high, so equilibrium. And this is really all we have inside of here to keep us in this range on the weekly time frame at least. We can move into the daily. As we see on the daily, same thing here. We do have, this is going to be a daily liquidity pool, and this will be a daily liquidity pool inside this range. And you do have this imbalance down here on the daily, which might just be kissing OTE. Yeah. So it's also just fractionally inside OTE. So we can see as low as, 110.25, 110.3. This is where I can see the low of the month coming in. We do have some fundamental drivers behind this. A few countries are selling their reserves of dollar and purchasing their own. For me, that'll be short-lived. Dollar interest rates going to continue going up. Bond market is still around 4%. So I see all of this being just a retracement back into this range. And then we will see higher prices. So for the week, I really don't expect a bullish dollar for a week. Maybe we can do weekly power of 3 where we open slightly bullish. Now I'll be looking at like the 4-hour chart, slightly bullish, maybe come back into here. Let me see if we reached premium of this range that we are in of this time frame. So we did not reach premium for this range. So yeah, that supports my idea. Dollar can push back up into this volume imbalance, or is this a weekly opening gap? Volume imbalance here, filling this imbalance and then seeking lower prices effectively, this weekly fair value gap, as well as discount in the larger range. So weekly projection would look something like this. something like that. That's what I have going for the week, and that will set the stage for our monthly power of 3 by accumulating below relative monthly opening price. Here, first 2 weeks, this is our price range. Again, I really don't see price having a reason to go below this for value gap. And if it did, I mean, this is a balanced area, but below that on this time frame, you do have this large inefficiency. So can we see prices down here? Yes. I'm just not anticipating it at current area. OT does have a chance to take out these equal lows inside this imbalance. So I'm not going to say it's not off the table. It's just not something I'm looking at with the current makeup of what the chart is showing. All right, let's translate that on over to indices. All right, back to the quarterly chart. So similar to dollar going down to start off the week, or dollar going up to start off the week, I do believe that we can see price deliver into this quarterly fair value gap to take us back up in the short term. That's what we're looking at, which will also take out sell side liquidity that we put in on Friday close. Take out the sell side there, partially mitigate this gap. And I'm talking like extremely partial, just very shallow on Monday prior to move up. As far as annual targets, we are in an annual imbalance here, so we could see price deliver as low as this. Not going to say that is a important level at this point in time. For me, I'm more so looking at the COVID range as a more important level. This will be, let me annotate this at least. And that's also paired with this quarterly order block nicely. As far as targets are for the downside, again, like I said, I'm looking at the COVID range, and that's going to be inside this candle or this candle. And I'll show you that there. This is your COVID range. My initial forecast in April was COVID highs, which is here. As we continue along this delivery and price, as he's like, there's just nothing stopping us. We're just moving with speed. This low is not out of the question for me. I wouldn't like to see it, but I'm not going to be upset. But at least inside this range is where I'm looking for the low possibly to be created for this bear market. Weekly chart. So as I said, I'm looking for the low of dollar to be put in sometime in the middle to late middle of October. Correlates to this chart pretty nicely. You have a couple of things that we can be looking at. This fair value gap to be taking us higher, as I stated earlier. Now, with dollar going lower to start the month based on seasonal tendency, where does that take us with indices? We'll be looking higher. We have a couple areas of interest on the weekly time frame. This weekly fair value gap. Now I'm just going to assume the low gets put in kind of shallow, call it there. This doesn't quite meet that criteria as discount. So we'll see where the low gets put in prior to looking up, because that will be our new dealing range. Buy side is taken here, buy side's taken, sell side's taken here. So whenever this swing low gets put in, this will be our new dealing range on this time frame. So I'll be looking potentially at premium prior selling, like this weekly order block, and PD raise around that, whatever they might be. Take you down to the daily. Get these quarterly lines off. So yeah, again, as far as daily goes, short term, I will be looking at these highs to be swept. The rest of this imbalance to be filled. Digging into this, this order block, we do have like internal liquidity here, more inefficiency, but where I'm more looking towards is going to depend on where the low of the month or the initial low of the month gets set, because that will define our range on the weekly time frame. I'm not really going to go through SPY. I really haven't traded SPY, and it's going to run in pair with NAS and US 30. Moving into currencies. As far as annual targets, this order block stands out to me as a possible low to get put in, paired with this liquidity. I'm not entirely sure that we're going to be able to make that run given the amount of seasonal bullishness from dollar we can expect. Yeah, 800 pips is large for a major, especially AU with an average pip of 50 to 70 pips a day. So that's a big distance. We'll see what the fundamentals in Australian dollar bring. If they stay low interest rate and they keep buying U.S. reserves, this is not out of the question. But the time frame is small, considering this is our yearly expansion so far, 3 quarters in, 1,200 pips. So this is a far fetch. See what we deliver quarterly. You're inside. You can call this a bullish order block. You're inside this bullish order block. Where's CE? Yeah, so that's like your first target. This could be a sensitive area for AU, the halfway point of this order block. Noteworthy. This is the first sensitive area I'll be looking at, and then like everything else, we can be looking at this to take us higher, partially mitigate PD raise in this range prior to going lower. And I'm still looking lower, high time frame. Closing below sensitive area of this order block, digging into it on the monthly time frame, but closing below one of the biggest sensitive areas, which is the high to the open. bear signal. What's the range here? Yeah, I don't think we're going to get 140 pips prior to our moving up based on the dollar range. So let's see if we can find some PD arrays on a lower time frame like this. Liquidity actually is the same. So that's stacking. So this is going to be a really sensitive area. Whenever we get here, we have a sell side liquidity pool, unmitigated for value gap, and order block on the weekly as well. Let's see if we can zoom in a little further, find something. Maybe just like this sell side liquidity pool. That's already been swept. So maybe this low. This is also a daily order block. So these would be my two areas I'm watching early on in the week. This is going to be the sell side liquidity pool, which is the local lows. Sell side liquidity pool and local lows, and then the daily order block below. And where does that put us with the range? 30 pips and 60 pips for a initial low of the week and low of the month. Well, low of the week and initial low of the month, those are good candidates, you know, roughly inside of 1 to 2 days pip range for this pair. So that fits nicely. And then obviously, like I said, looking higher. And then this would be my high of the month call prior to bullish dollar seasonal tendency kicking in. I'd expect to come back up into this for value gap. This is going to be relatively efficiently delivered, the wicks on both sides, right up until this low was taken, and then we fell through the floor. So this is going to be the area in which I'm watching. Makes sense as well. Monthly fair value gap. So for me, this is a balanced price range. So this area should be sensitive to price. Hopping into EU. Start with the annual. Going to annotate this. This is an order block. That's another sensitive area for price. As far as yearly targets, go, maybe CE. I don't want to. This liquidity pool also looks very good with inefficiency below, and this inefficiency wasn't fully delivered, so refilled. As far as price, we are, you know, clean deviation from the highs here. Highs taken. Highs taken. You have your smart money reversal here for value gap mitigation. So this is your first leg on an annual time frame of a sell model. So, you know, this eventually will be the target. And then, I mean, this is insane, but you have this order block here and this inefficiency, which are, I believe, thousands of pips away. Yep, 2,000 pips away. But those areas won't be off the table, long term, unless fundamentals position us to shift. And even then, I'd be looking at one of these lows on the yearly. Quarterly, this low will probably be my objective for the quarter, or even this order block right here, just a little lower. That's where I'll be looking for the year close. And then obviously below that is these equal lows that we were talking about, fitting with dollar. Go to the weekly. As far as interest goes, what could take us lower? EU seems to be like the most bullish of the majors. You have a BPR here, but I do believe that this high is on the table to be swept in the next 2 weeks, assuming euro's strength continues, isolated from the dollar. Yeah, for me, I think this high is on the table. You do have this inefficiency up here. To allude to, this never came to premium. So yeah, this to me is not efficiently delivered. So I'll be looking at this area for price for high of the month. GU, as far as the monthly goes, is the weekly, sorry. Correct. Yep, sorry, I didn't label a level, getting punished by having to go back look. Filling in volume imbalance on the weekly, and obviously sweeping all-time lows. So this can get bullish just based on technicals. That can get bullish after sweeping a liquidity pool such as all-time low. But again, in my opinion, it's gonna be short-lived against strong dollar and fundamentally poised to run dollar. As far as quarterly targets go, I'm still going to be looking lower. There's just nothing to draw my attention to, and that's where I'll be, as seldom as I already trade currencies, I wouldn't be looking at GU below like this price, because I don't know how to trade ICT concepts in price discovery mode, at least yet anyway, and that's just going to be based on projections and ranges, because there's no existing liquidity where price has not traded yet. So I'll leave that to speculators and stuff like that. As far as the short term, weekly draw. Fair value have to take us up into, and then the order block prior to this down move. So this is going to be my high of the month candidates, as well as it stacks up with this rejection block that's now flipped. I don't know if that's called something, but this is going to be a significant area of price, regardless if ICT has coined a term based on it. Stacked with PD arrays or block, down move, fair value gap. Where are we at in terms of the weekly range? Already in premium. So maybe this high can be swept, depending, and then seek this inefficiency right here, which would make this our dealing range. So we will see this week how pound wants to be poised against weak dollar, and then we can make an accurate judgment based on whether we're going to be looking at this area or this area for high of the month, and probably high of the quarter. UCAD. UCAD did not care whatsoever that dollar was bad or weak. Short term, what does that tell me? I don't keep up with CAD too much besides oil, which even recently I haven't been keeping up with too much. I've really been focusing on indices. It's been my main focus, as y'all in my group know. Quarterly targets, highs, relative equal highs here. Quarterly target and yearly target, which would also make this of interest, which is going to be quarterly for value gap. I can go over Bitcoin and Ethereum. I won't tell you anything with conviction because I don't know how they behave, what they're based in. I don't know that I haven't looked in their seasonal tendencies and stuff like that. So I will give you my opinions at the end. So yeah, I'll be looking for these equal highs to be run and mitigate this quarterly for value gap partially. And you could pair that with this order block here. I'm not going to make any bold predictions on this pair because it's not caring about dollar weakness at all. It's even, I mean, it hasn't made any lower lows all year. So this is the start of the year. I mean, we did make one. We ran liquidity, and then we've been making higher lows and higher highs all year. So this to me is institutional order flow entry drill. So I'm not looking for this inefficiency to be filled. This is what ICT calls a breakaway gap to me, just based on what price is delivering here on this time frame and where it's reaching towards these highs. So yeah, I'm really not even going to give you anything that I stand by in terms of price delivery because I'm not knowledgeable enough on CAD to make an accurate prediction, besides that this wants to just keep going higher. So we see the high get swept and then go down to start the month and look at these equal lows. Absolutely. But this is not a pair that I believe will go to discount. I mean, you can call this the range. I mean, possibly fair value gap here. Possibly, but I won't be participating here. And this I don't trade EG. So I'm gonna stop the share here and then we'll go over crypto.